Hey everybody, it's Pete. Welcome. Hope you're having an awesome weekend. Thank you so much for joining me today on today's Best Stock Picks. We're actually going to be looking at 3 picks this week, heading into the week of July 19th, 2021. Why 3, not 5? Well, if you traded last week, you know the market was tough. Friday, the market got beat up, probably a little bit overdue, but we need to keep it in context. The SPY, as we're going to take a look at in just 1 second, finished down less than 1%, which we've been having so many stocks go up 10% in one day that the market falling back at all feels like a catastrophic day. And it was nothing more than a little bit of profit taking. We throw the pandemic on there, throw inflation on there, and it still didn't pull back that much. Was it ugly? Was it hard? Yeah, but it was. When's the last time we had a move like that? I can't even remember, quite honestly. The market, as well as active individual stocks, are going to go like this. What's not common is when they go like this, don't pull back and give everybody a feeling that it can't pull back. So the fact that we even pulled back at all was shocking to some people and not shocking to people that have been around for a while. It's kind of way overdue. We were starting to get to the field to the point where it was kind of like musical chairs where we just kept going higher and higher and higher and higher. And you felt like, all right, at some point, there's not going to be a seat left and it's going to roll over. And it didn't mean we weren't buying stocks. We were definitely actively buying stocks. But, and here's the big thing, we're going to cover sector rotation heading into Monday. We're going to cover sector rotation last week and how that flowed into trade management. So we're going to talk about the market. We're going to talk about sector rotation, how that affected trade management. We're going to take a look at the top 3 stocks. We're going to look at electric vehicle stocks. We're going to take a look at the meme stocks and how they got pounded a little bit last week. I'm sure the AMC apes who bought that stock are not feeling too comfortable right now, especially if they bought options. And then we're going to actually go into 3 losing trades from last week and why I was perfectly okay with the fact that I took the trades. I liked the trades, but they were much smaller losses. And I'm going to show you why they were much smaller losses. I'm going to show you the trades, why I took them, and how the sector rotation fit into the context of position sizing. So stick around. We're back in just 1 second. Thank you so much for joining me today. Okay, so as with everything we do, especially the stock pick videos, just want to make sure everybody knows these are for educational purposes only. All of these are ideas that are in my game plan, and then after the market opens, I decide which stocks I'm buying and at what levels. So please make your own decisions or consult your financial advisor before taking any of this into consideration. So we're actually going to start out first taking a look at the market. We're going to look at the SPY. And as I said over here, we barely pulled back 1%. It wasn't even 1%, quite honestly. What screwed everybody up and what really messed with everybody's mind was Thursday afternoon, and specifically this rally. If you know anything about textbook price action, I'm just going to come back on the screen here just for 1 second. What we're really looking for, and again, this is textbook. Again, I keep doing that, where we go up 3, 5, 7, 8 days of green candlesticks. We call them well bid, higher highs, higher lows. Best case scenario is we go sideways, which we call well bid, and we take off again. But even better trades where you can dig in a little bit more is when you pull back. You get well offered candlesticks. You get one candlestick that has lower lows, lower highs, and closes on the lows. You get a second one, then you get 2 red candlesticks closing on the lows, the second one with lower lows. That set up the perfect trade the next day where you're looking for the stock or the market to barely test that previous day's low, maybe punch through it a little bit depending on how strong the trend was. So going up 7 or 8 days in a row, pulling back 2 days in a row, and then that third day after the 2 days down, that's setting up one of the best trading opportunities that you can get. Thursday afternoon, the market got all messed up where in our community, we were like, yeah, go down just 1 more day. Let's flush everybody out and we'll set up some great opportunities to get long. That's a big part of being in the community, understanding what price action you're forecasting, what you want to see, what you do if you don't see it, how you adjust your share size. That's real trading. And that's the difference between being a chart reader and being a trader. If you'd like to learn more about our community, definitely click below. I'd love to show you what the 30-day boot camp is all about. But we didn't get it. And that's really what messed everything up. If we go over here to Thursday afternoon, we were all set to have a lower opening. This was pushing down around 2 o'clock in the afternoon. We're like, oh, finally, the market's taking a breath. We're going to be able to let one more day go down. We'll feel comfortable. Then Thursday rallies up into what is basically it opened where it closed in the SPY. And if we go over to the price action over here, you can see that we ended up in what most people call a doji candlestick. So going into Friday, we're like, all right, I guess the buyers came back. That was the end of it. Market opens higher, actually a bullish gap higher. And we're like, all right, I guess we're all just buying again. And that was the pullback because that's all that it's been for the last week to last 8 to 10 weeks, really. So the first pullback after the gap up, you're looking to buy, you get in there and moving lower slowly. You get another signal, moving lower slowly again. So the day trading scenario was to be long because of Thursday afternoon rally, which was pretty strong. Took it all the way back up to the opening price and kind of messed up what we call that picture perfect action of up and down and put back and get long. So we finally got it. But the reason I just went through that is if you are a real trader, if you're actually in the market risking capital, last week you had to feel like you had your head beat in. I mean, it was one of those weeks where, look, let's be honest, I'm completely transparent. I have winning trades, I have losing trades. It's not a question of winning or losing trades. It's a question of, do you do what you're supposed to on the winners and losers? Do you keep your losses what they're supposed to be, which are acceptable losses? Watch what I did the video I did last week on risk management. And do you make enough on your winners? So it's not a question of having winning trades and losing trades. You get questions and comments all the time of people angry about whether trades work out perfectly. Even if I took every single trade, I'm still managing the trade from a risk reward perspective. And I hope that you are too. So what did we do last week and how did that translate into trade management? Well, that's what we're going to focus on now. We worked on what the market's doing. The market pulled back. You can see the next two levels that we're looking at. So we only have 1 day of pulling back. So what we're actually looking for tomorrow on Monday is pullback into this area of around 429, probably in the first hour of the day, and looking for buyers to step back in. If that doesn't happen, then we're going to finally get the 2 red candles in a row, somewhere in between here and here, and then we're going to look to bid aggressively. So think about what I just said. I just set up 2 different scenarios for how I plan to trade on Monday and going through the week. I'm not guessing. I never guess. I know what I expect to have happen. If it works out, unfolds exactly as I want, that's what I hope I can teach you. That's what I hope I can give you. None of trading is a guess. You don't make money predicting. You make money by knowing what's probably going to happen, but what you definitely plan to do, which is why I'm excited, so to speak, to show you the 3 losing trades that I had last week that were swing trades, why I take them again, but why they were small losses. So now we're going to work our way over into looking at the sectors. So this picture, this is the first picture of heading into the sectors on Monday, which is setting up not really great, quite honestly. This is the trading action on Friday's price action. We got hit. The monthly performance, which is the last 21 days, not looking great either. The only thing that was strong heading into ending Friday into Monday is utilities. Consumer defensive has been strong. We've seen some breakouts in Pepsi, Costco, Walmart can't seem to get out of its own way. Target has been up there. So those kind of stocks have been pretty strong. Other than that, financial has not been able to hold the bid. Technology, which is the one that was holding the entire market up, not able to hold the bid, although that's the one you have to keep an eye on. Industrials, basic materials, and energy also have not been able to hold a bid. So the infrastructure bill that was supposed to help this group is not helping the group. So again, pay attention to price action. So working from the price action heading into Monday into the price action that we are going to be looking at from last week. We're going to go Monday. You see, this is last Monday. We looked okay heading into the week. Technology and basic materials are starting to perk up a little bit, and the Friday price action was great. Then we went into Thursday. Nothing performed really well. Heading into Wednesday, again, nothing performed well. Getting in, taking trades, losing some, pretty much. And again, this is real trading. You go the week where small losses, small profits, small losses, small profits. And we said this a lot during the week. Everybody in our community can vouch for this. And I said it probably Tuesday, Wednesday, and Thursday. Sometimes when you're trading at home, you don't have context. And a small losing day can actually be a good day. A small losing week can actually be a good week. But the way the market traded last week, you got kind of like every day of the week. That's what it felt like. If you ended the week with a small profit or a small loss, That was actually good trading. And what I mean by good trading is that you recognized the conditions, kept your activity level down, took the trades that matched your edge, and made sure that your position sizing was proper. So I don't want anybody to think that somebody who's on YouTube or myself or anybody else is making money all the time. I never claim to be I'm making money all the time. What I am doing is actually placing trades, though, which I get a feeling a lot of people aren't. So when I talk to the community, when I'm in the game plans with our community, I'm in the coaching calls with our community, we don't trade for the sake of trading. We trade because there's great ideas. We get a lot of comments, too, about why aren't you trading cheaper stocks or less expensive stocks? It's not that I'm calling out only higher price stocks. I'm calling out the best ideas. We had a bunch of great ideas for a long time in the Chinese electric vehicle stocks, some of the solar stocks. They're just not in play right now, so we're not going to call them out. So I just want to passionately let you know that if you had a tough week last week and you paid attention, which means you reduced your position sizing, maybe you booked profits a little bit quicker, maybe decreased your activity level. If you had a small losing week, that was actually a good week of trading last week. So don't get discouraged. Get a really good night's sleep, and let's get back into making it back this week. All right? So now we're going to work our way over. Again, I said Tuesday was tough. Wednesday was tough. Thursday afternoon kind of came back, which is where we had this happen heading into Friday. And Friday looked great. And then we just kind of meandered the rest of the week and didn't have anything happen. So that's the outline of what we're looking at heading into this week. So we're looking for two different levels. We're looking for the SPY to open up, find support here around 429. If it does, we're going to get a little bit more aggressive. If it pulls all the way back here, now this is the difference between the two trades. If I just say right now, spot 1 or spot 2, this is what separates somebody who really pays attention to their trading from everybody else who's just placing orders. Spot number 1 is higher. That means that buyers are stepping back up again and the order flow is valid again. If that happens, I'm going to be a little bit more aggressive with my position sizing and my entry, especially in my initial entry, because buyers stepped up sooner within the price action the way I look. If it goes through that level and goes down to the next one, which is around 426.5, 427, then it's a deeper pullback, whether you use Fibonacci's or anything else along those lines. Then I'm going to work the order a little bit. So instead of having my full position, I'll probably do it in a half or a half, waiting for it to move in my favor, or a third, a third, a third as it moves in my favor, so that the deeper the pullback, but still valid bullish order flow, I'm still looking to put the trade on, but I'm decreasing my exposure because it's not perfect because it didn't hold up. Very important to learn. And again, this is stuff that we go over every single day in the community. It's not the same share size every day. It's not the same profit target every day. You have to get in there and pay attention. And the way we talk about it in the community is one day it's open road and you're doing 95. The next 5 minutes later, it's stop and go traffic. Understanding how to spot that and then acting on it is what makes you elevate your game to act like a pro. And that's really what I hope to do in these videos too, to at least give you those ideas. So we're going to segue over now out of the sector rotation. We're going to take a look at the top picks. Now, the thing that I want to talk about with these top 3 picks is I want to be very clear. There's a difference between thinking the market opens and you start buying versus I want the stocks to start moving in my favor. So these are going to be buy stop orders that the stock has to trade up to that price. If the market opens and they just drop, I'm not even going to be in the trade. So before I get any hate mail, I'm looking at buy stop orders above, and I'm going to give you the levels that I'm going to look at, because the deeper pullback in a lot of these stocks, again, like I just said, I'm going to be working these positions in pieces because of the deep pullback, not putting full exposure onto the trade, and I want them to trade up to that price. I want the reversal to happen. I'm not going to guess on the way down. I want it to go this way, and if it starts to turn around, then I'm going to get in at the price, what we'll be using a buy stop order up at that price. So we're going to take a look first at NVIDIA. Obviously, a really good longer-term trend. This was the potential trend right here. Finally got below this level. But the longer-term bullish order flow is still intact. This is a trade that I'm looking for NVIDIA to get back above the 740 level. That's where I'm looking at NVIDIA. If I get back above 740, that's going to be the first area I'm going to be looking to get a new trade on. And the first area of resistance is going to be up in that 790 area. So that would mean that if I'm looking 740 to 790, that's $50. That would roughly translate into no more than a $13 stop loss on this position if it reverses. Next, I'm going to be talking about CRWD. CRWD has been one of the stronger stocks, and you can see really clean pushes and pauses in the stock. This is actually the first time it pulled back. So if you remember what I said before, we talk about stocks that push up and go sideways or push up and pull back. The pullback is normal. But when a stock pushes up and goes sideways and then pushes up and goes sideways, that means that there's strong bids underneath that stock. That means that stock has buyers under there. This is the first pullback, traded into what we call an inside candlestick. It paused. We're looking for CRWD to break out to the upside in this stock. And the price that I'm looking for is $255. So again, if it comes out of this and trades down, I'm not even going to be involved. It gets up, trades to $255. I'm going to be looking at $270, $275 as the first level to the upside. The third stock I'm going to be looking at today is Amazon. Amazon broke out. You can see here, if you've been watching the channel for a while, stuck in this range for the better part of a year. Finally got out. Now we're pulling back to what was the breakout level. But again, I still want to see it reverse a little bit. So it's pulling back to this level. It's pulling back to a key support. You can see these two red candlesticks, which I defined before as the price action that I really love to see. But the price level that I'm looking for on Amazon is I want it to start to trade back up above 3,600. Then I'm looking for it to at least retest the 3,760 to maybe even make new highs at 3,800. So remember, if it keeps rolling over, I'm not in the trade. I'm setting buy stops up above those levels. One other stock I want to point out today, maybe not the perfect one, but we're going to talk about electric vehicle stocks now, is Tesla. Something that was pointed out this weekend is once, twice, 3 times, 4 times, almost 5 times that Tesla is holding this trend now. So it's going to be very interesting to see if it dips down, touches Thursday's low, holds support, holds this longer-term trend, and then reverses. So that's price action I'm going to be looking for in Tesla. Working our way over into other electric vehicle stocks, specifically NIO, bearish order flow, LI, which is kind of hanging in a little bit better, and XPEV, which has been the strongest of the group. And you can see why over here. They're not really on my radar right now. I'm not going to be on my radar until I see this. I want to see an energy candlestick. I want to see this. I want to see buyers step back up, close it on the high, and give what we call well-bid candlesticks of higher highs and higher lows. I'm not guessing while it's in the middle of nowhere. So candles are getting smaller. Candles are showing less energy. There's news on the sector. There's geopolitical news on the sector. I love trading this industry group. It's not in play right now. I've been staying away from it. Working our way over. Actually, you know what I want to do is first I want to talk about some cannabis stocks. We've been getting a lot of conversations about cannabis stocks and if they are something to start looking at right now. And the answer is no. I mean, Tilray finally finding some support down here in the $14 area. CGC, these are really the top two that we've been watching. CGC, Tilray, and GRWG. I don't see a reason to be in any of them right now. You really must have an emotional attachment because none of them have any kind of bullish order flow. I love to trade them. I want to trade them. They're just not in play right now. So want to stick over and cover on that as well. Some financial stocks had good earnings last week, have not been able to hold the bid. Morgan Stanley reversed. Goldman Sachs reversed. So I'm not looking to be involved there either. Citigroup actually had much worse price action. So they're not in play right now either. The bigger tech stocks, they are still looking decent. Facebook, Microsoft, Apple. However, probably the strongest of the bunch, and maybe one of the companies that's been around the longest, is Oracle. Oracle is well bid, holding this bid, has not pulled back. It was a rock. So I like it much better over 89. Right now, it's kind of just in this window, but holding up and even showing the relative strength from Friday. That's another stock I'd definitely be keeping an eye on. Above 89 is looking at roughly a run to 100. That's a pretty seamless trade right now, and I love the way it's holding the bid. I want to finish up the video with something very important, which is talking about some losing trades that I had last week and how the sector rotation and being on top of the game plan every day really mattered. It really affected my position sizing. It affected my profit expectation. And I'm going to talk about the 3 losing trades, but I just want to ask you for one favor. If you're new to the channel and you haven't done so already, click down and subscribe. I'd really appreciate it. Smash that like button. That would be awesome too. And if you want to get updates when we do new videos, hit that alert button too. So again, if you remember what I just talked about, the inconsistency of the market, actually heading into today, a staggering number heading into Monday, 96 stocks meet the criteria as I run the scans in my algorithm. 96 stocks meet the bearish order flow criteria after Friday's trading. Only 4 meet the bullish order flow when you take the longer term consideration, plus how the market traded, the stocks traded last week, especially Friday, 96-4. We got to let that work itself out. Again, that's why I'm forcing stocks to head back up. So we're going to talk about 3M. We're going to talk about Goldman Sachs, and we're going to talk about TAL. Three swing trades I initiated last week. All of them lost money, but I'm going to show you what they look like, why I put the trade on, and why I only lost 1/3 to half of what I would normally risk on a trade because of what we looked at in the sector rotation. And we talked about these in the coaching program. We talked about it in the boot camp. We talked about it in our swing trade program. I was emphatic. The market is not clean. The market is not clear. You need to reduce your position sizing and force the market to be moving in your favor on these good ideas that looks like the market is heavy. So the ideas were good. It was floating and going in one direction we wanted it to go, but the drag from the rest of the market just got too heavy and pulled them down. But because we recognized what was going on with the rest of the market, we were super, super clear. Reduce your position size on the initial entry. We love these ideas. We especially love them if they can clear certain levels, but we need to force the market right now to move in our favor before we start to size up. Okay, so I'm going to show you first. We're going to take a look at 3M, which is a trade that we actually got stopped out on the day that we put the trade on. And the way we explained the trade was we have good solid order flow now going on for the better part of 4 weeks. We're seeing consistency with making new highs, consistency with holding higher lows. We actually paused over here. And this is how we analyze the trade and work the trade out. Industrials, we're not getting the help from the infrastructure bill that was expected. Okay, that's fine, but the stock rallied anyway. So you listen to the stock, not the news, right? But we clearly were having a hard time getting above this 206 level. So we had short-term order flow, a nice pause in the price action, but significant resistance just ahead. But really big levels through that if we can clear that. So what we said in the video, to our community was we were going in this trade with reduced share size. If it follows through, great. We'll look to add over 206. If it doesn't and it pulls back, we simply take a loss on half the position. And you can see the market got super heavy. It's not the fact that the trade lost money. Again, what's more important is we recognize the market conditions. We recognize the potentiality of big resistance and what we could earn over that big resistance. But because of all of that combined, we only had half of our intended position sizing. So when it burst out and got heavy with the rest of the market, unusual, very unusual that we took a loss on the same day that we initiated the swing trade. But it doesn't matter if it takes 3 weeks or 1 day. It's still the parameters that we like for the trade. So that was one trade and all of the reasons we reduced share size. The second trade is Goldman Sachs on the day of earnings. Looked like we actually had a really nice reversal here heading into earnings. And we actually were opening up $5 higher after earnings, the morning of earnings when earnings came out. So the game plan that we said, and usually, like I just said, we usually have a buy stop order looking for it to move in our favor. But this time we had an earnings catalyst. The financials were really not that great unless you're talking about the credit card processing companies. So here's the game plan. Here's what we put out for everybody. Because it was trading up here and the earnings catalyst looked really good, still a little volatile. It was trading volatile pre-market. It was all over the place. So we said we like the idea. We're going to put the trade on, look to put a limit order below the market. So it was up $5. We said we wanted to get down to here. If it pulls back and puts us into the trade, our stop loss would be just below there. But because of the earnings volatility and the market being a mess behind it, again, we're going in with half share size. So we actually ended up pulling back, getting into the trade and getting stopped out. But again, because we recognized the big picture, the loss was reasonable. The loss was acceptable. The loss stinks, but it was acceptable. The reason I'm going over this over and over and over again, because we're heading into a tough week, but more importantly, I want you to learn. I want you to understand that every single trade is its unique own snowflake, and you need to analyze and put together these pieces, what we call build the argument for putting on a trade. And we like the argument, but certain things had to happen for us to put more money into the deal. So we're like, okay, I'll put a little into that deal. And if it works out, great, we'll put a little bit more and we get better feedback. If it doesn't work out, it was worth it for the potential because we didn't put too much in the deal. So that's the second one. Goldman Sachs rallied up, pulled back, got us into the trade, and we got stopped out, didn't follow through. No big deal. That's professional trading. Now, the last one we're going to talk about is TAL. And we described this as a little bit of a different trade. And we walked everybody through this last week, where you can see clearly it's got bearish order flow. Clearly, if you're a member of our community, you know this is not something we normally look at. But then you dig a little deeper and you see accumulation. You see the smart money stepping up. And in this window here, a lot of buying is going on. So the trade that we were looking at was in 3 pieces, put on 1/3 with a stop loss. If we get stopped out, not a big deal. But if this buying, if the deep pockets, if all of this volume starts to step up and push the stock higher, we have the most amazing first entry. So this is different. This was bullish accumulation, not bullish order flow. A lot more aggressive trade because it's not already moving in our favor, but the volume under there is kind of like a duck under the water. Something is going on, but you're just waiting to see it happen. Moved in our favor for a couple of days. Big day on Friday. The market rolled over. We got stopped out on that trade. But again, it was 1/3 of our position sizing. If you're wondering what the key is, if you're wondering what's missing in your trading when you buy stocks right now, position sizing is a big part of it. There's probability, there's risk reward, and then there's your position sizing within the context of probability and risk reward. Learn the difference between an A+ trade and everything else, and you'll understand how to manage your position sizing, and you'll stay above water in tougher market conditions because you didn't overtrade. So Friday, this stop took us out. We'll look for another entry. If it happens again this week, that's great, but we're going to work it the same way because the difference between bullish accumulation, where it's going down and sideways with heavy volume, versus it's going up on heavy volume and pausing on lighter volume. So the pause and the volume in the pause is what separates the two. So we covered a lot today. You can hear from my voice. We had a ton of coaching calls this week. It was a really good week of learning, and probably the biggest thing I was most proud of our community, and I hope that you did the same thing, which was managing your expectation, managing your position size, and managing your mental bank account in what was really a challenging Excedrin week where you needed some aspirin this week. Was it frustrating? Sure. Does losing money stink? Sure. If you recognized all of it, though, you kept your losses small. You're not digging out of a hole when the market gives us better opportunities. Now you're going to be net profitable instead of digging back and being break even. So thank you so much for choosing to be with me today. I really, really appreciate it. We have a webinar that's coming up next week, too. I'll let you know about that during the week. If you're on our email list, you'll see an email about that, too. So have an awesome night, everybody. Hope you're having an amazing weekend. And that's the game plan heading into Monday and the week of July 19th. I'll speak to you soon. Take care.